RexShares' new fund launch could redefine the entire high-income ETF space. RexShares just launched the Rex Income Max Option Strategy ETF, ticker ULTI, officially trading on the Nasdaq as of October 31st, 2025. Investors are calling it the hedge fund style upgrade to the collapsing ULTY, a fund that once promised income nirvana but ended up bleeding value faster than it paid it out. But ULTI's pitch is a bit different. They're targeting 20 to 30 of America's most volatile stocks, names like AST Spacemobile, Marathon Digital, Rocket Lab, and NewScale Power, and squeezing weekly income out of their volatility. The strategy? Real stocks, active management, and built-in downside protection through option spreads. The fund's plan is to use a model that is designed for maximum income and minimal decay. But here's the question we'll answer today. Is this actually the breakthrough that finally makes weekly income sustainable? Or is it just another high-yield illusion waiting to collapse under its own weight? Let's dissect what's inside, how it works, and whether ULTI truly has what it takes to kill its predecessor. The fund currently holds about 20 equities, each roughly 4.4 to 4.7% of the portfolio. That's smart portfolio engineering, evenly spread, so no single name can tank the fund's value overnight. Around 81% is in stocks, while the remaining 18.8% sits in cash and short-term treasuries for collateral and flexibility. The holdings include Sarepta Therapeutics, a biotech company focused on gene therapy for rare diseases like Duchenne muscular dystrophy. They've had big wins like Elevities, but this is still a binary story. I'm not a fan of biotech stocks because it only takes one FDA hiccup and the stock can crater overnight. Great for short-term premiums, bad for NAV stability, in my opinion. Then you have Gemini Space Station, the crypto exchange, from the Winklevoss twins. This is pure volatility gold. Bitcoin swings, regulatory noise, and IPO momentum make it perfect for option income. Plus, Gemini's compliance-first model gives it staying power in the US market. You also have Core Scientific, a hybrid miner/data center play. This gives dual exposure to crypto and AI volatility, which is exactly what ULTI wants. They also hold SolarEdge, The Trade Desk, Figma, Sunrun, and a host of other names that round out the portfolio. This is a thoughtful basket. You can tell it's been built with intention, not just chasing hype. There are a few moonshot bets in there, the kind that make or break quarterly performance. High risk, yes, but also high potential if the timing hits right. Roughly 80% of the holdings are winners, names that perfectly balance growth with volatility. You've got exposure to crypto, AI, nuclear, and space, all sectors that move fast and carry massive premium potential for an income fund like this. About 15% of the portfolio sits in weaker spots like solar and biotech, segments that could drag returns if trends don't reverse soon. And the remaining 15% are the steady hands, lower volatility, more predictable names that add some balance to an otherwise aggressive setup. Overall, it's a smart structure, volatile enough to generate real income, but not so concentrated that one blowup destroys the NAV overnight. ULTI's team, led by Rex Advisors, picks stocks based on things like implied volatility, trading volume and liquidity, upcoming catalysts like earnings or product launches. They want names that can create big option premiums because that's the fuel for income. Sometimes ULTI will hold the real stocks, other times it'll use synthetic positions, which is simply a combination of options that mimic stock ownership. Either way, it's getting full price exposure to the stocks it wants. ULTI actually makes its money through options income, earned directly from the same stocks it holds. When ULTI sells a call option, it's basically saying, I'll let you buy my stock at a certain price, but you have to pay me for that privilege. When ULTI sells a put option, it's doing the opposite. It's saying, if this stock drops below a certain price, I'll buy it from you. Again, ULTI gets paid upfront for taking on that risk. Each week, those small option premiums start to add up, and that's what turns into cash flow for investors. But there's always a trade-off. When you sell calls, you're giving up some of the upside if the stock rips higher. And when you sell puts, you're taking on more risk if that same stock crashes. Something investors need to consider before investing. Honestly, just the fact that the fund's upside is capped makes me lose a bit of interest right away. That's always the trade-off with covered call, income-focused strategies. You're giving up some potential growth in exchange for more consistent cash flow. But to be fair, it's still too early to make any solid judgment on this one. We'll need at least a couple of months of real trading data to see how the managers are actually running it, how actively they're adjusting the positions, how much of the upside is being sacrificed for income, and whether the structure really holds up in different market conditions. Until then, this is one of those wait and watch situations. Now, to avoid blowing up when the market swings, ULTI uses a mix of option spreads and collars, basically smart combinations of bought and sold options that limit both the downside and the upside. To keep it simple, when stocks go up a little, ULTI wins. It collects its weekly income from options and also sees a bit of growth in its holdings. That's the sweet spot for this strategy. However, when stocks run up fast, ULTI lags behind. Remember, it's selling call options, which means its upside is capped. It'll still earn income, but it won't fully participate in those big rallies. And when stocks drop, ULTI's option income helps cushion the fall, but it's not bulletproof. If prices fall too far, the fund can still lose value. So in simple terms, ULTI won't crush the market in a bull run, and it's not fully protected in a crash. But in the middle ground, when markets are choppy or drifting sideways, that's where this ETF shines. That's when it can deliver steady, reliable income. Honestly, after carefully analyzing these two funds, I see a lot of similarities. Both are built around high volatility names, the kind of stocks that swing big and create opportunity for income through options. And both funds, in one way or another, cap their upside potential. The key difference? This one isn't managed by YieldMax, and that alone makes it worth watching, not necessarily rushing into. It gives investors a chance to see if a different fund manager can actually execute this strategy more efficiently. There's really no reason to jump in right away. From a pure strategy standpoint, nothing here is groundbreaking. But because it's managed by a new team, there's potential for them to approach it differently, maybe even fix some of the weaknesses we've seen with YieldMax's fund over time. At the end of the day, this industry runs on competition, and whoever can deliver more consistent results will ultimately attract more assets and, of course, more fees. So I'd give it a few months. Here's where I stand. ULTI is interesting. It's new, it's ambitious, and it's clearly taking aim at YieldMax's weakness. But new doesn't automatically mean better. Until we see how this fund performs through a few months of volatility, it's all just theory on paper. The concept makes sense. Sell options for weekly income, hold real stocks, manage risk through spreads and collars. It's a familiar playbook, but execution is what separates a good income ETF from one that quietly bleeds value over time. For now, I'm keeping ULTI on my watch list, not in my portfolio. I want to see how stable the distributions are, how well they manage stock price decline, and if the total return picture looks sustainable. If they can show that they've solved the core problem, paying investors without eating away at their principal, then this could turn into something impressive. But until then, this is a wait and verify situation, not a buy the hype one. If this breakdown saved you from another NAV bloodbath, or if it gave you any value, smash that like button. Don't forget to subscribe if you haven't already, and drop a comment. Let us know if you bought ULTI or still on the fence. See you in the next one.